Great. Welcome to our Oregon PERS webinar. We are excited to be here. We're going to do some introductions in just a minute. And we are live on Facebook as well. So welcome all those joining either virtually with us today or by recording as well. Glad to have you here. And yeah, let's kick things off. How about that, Edgar?
Perfect. Let's go.
Well, here we are. Two very well-dressed gentlemen today are here to bring all of your Oregon PERS updates. So I'd like to introduce Edgar. Edgar is one of our financial advisors here at Financial Freedom Wealth Management Group. He's been with the company more than 5 years now, which is amazing. And Edgar is a graduate of what I would say is a very prestigious school, Oregon State University, home of the Beavers. Honors graduate you are, Edgar. You've focused in finance and economics, and I know you've done a lot of different variety of things with accounting and different stuff like that. But I know in your spare time, you like doing things like hiking, outdoors, disc golf, watching those sports teams. Any favorites you're rooting for this year?
Yeah, I think I watch a lot of the English Premier League, so I'm an Arsenal fan. I'm a big Portland Timbers fan as well, so always lots going on.
There you go. Great. Well, welcome. Glad to have you here.
Thanks. And I have the pleasure of being here with you today, Jason. Jason Harris is our president and chief operating officer here at Financial Freedom. He's also a certified financial planner, CFP. So it's wonderful to work with you and get to learn from you. How convenient. You also are a graduate of that very fine institution, Oregon State, go Beavs. And you also have your your MBA in finance from Walden University as well. So many of us know that you're very involved in your local community and, through the Chamber of Commerce and your church, and you have such a wonderful family as well. So it's good to be here with you.
Thanks, Edgar. And I will, just for those Duck fans out there, we do still acknowledge we have people on our team that are Ducks, and we know nice people in Eugene, so there's nothing wrong with that as well. They just picked us to do this, so we're glad to be here. All right, I'll let you take us away, Edgar.
All righty. So for those of you who are new to Financial Freedom Wealth Management Group, who are we? So the company was founded in 2001 by our current CEO and founder, Julia Carlson. We are a comprehensive both management and planning firm, and we really are committed to helping our clients improve their long-term success and pursue what their version of financial freedom is. Retirement is a very individualized thing, and our goal and our end result is to walk alongside you to help you achieve said goals. We serve a variety of different people, but for today, we are focusing right now on pre and post retirees wanting to build and protect their wealth, people developing and growing their wealth, so people that are starting their accumulation phase and really want to get a plan in place for their future, and also business owners that need financial services. But really, we like to help as many people as possible, but we see a lot of folks in these categories come to us. And our commitment to all of you is to care deeply about you and your financial life. And this is our wonderful team. There are a few people that are not shown on here, but they are still just as important. We have 6 wealth advisors, our financial advisors, and 14 support staff that are here and ready to help all of our clients with achieving their goals. And as we move throughout this presentation, we welcome any and all questions. So in order to get those submitted, just simply text us at 458-777 4458. We will be answering questions towards the end of the webinar. So as soon as you have something come up, feel free to text us and we'll go ahead and get that answered for you. So go ahead and send away. So first, let's start with a overview of Oregon PERS. So there are 4 tiers that folks can essentially fall into. You can see on the screen what it takes for you to become part of one of those tiers, and it depends on when you were hired. And one really cool thing about the Oregon PERS system is that tier 1, tier 2, tier 3, all of those benefits are actually paid for by the public employers, which is really unusual in the public sector retirement systems. No employee contributions go into the pension plan itself. It's all done by the employers. There is something extra called the IAP, or the individual account program. And most people have this as well as their pension. This is the section where about 6% of your pay goes into that. And it's a really good thing because essentially you have your pension plan and a little money on the side as well through your IAP that's being invested for your future and really setting you up for long-term success. And now I want to focus on retirement. You've worked all these years, you've put your time in. Well, when can you retire? What does that look like? So this slide right here is focusing on tier 1 and tier 2, and I'm going to go ahead and do a case study to illustrate how this works. So let's say, for example, you are 56 years old and you have less than 30 years of PERS service. With those two facts, you are not eligible for full retirement benefits if you're tier 1 or tier 2. But the good news is you still would be eligible for reduced benefits. So you could still retire, but there is going to be a reduction in the benefits that you receive. But let's take this exact same scenario and say that you are still 56 years old, but now you have 30 or more years of PERS service. You can retire with full benefits if you're tier 1 or tier 2. So if you take a look at the graph here, or the chart here, the very top line, all members that are tier 1 and tier 2 can retire with full benefits at any age, as long as they have 30 years of PERS service. And that's amazing. Now, if you're tier 1 or tier 2, there are different ages for full retirement, but then there's also different ages for reduced retirement benefits. So really, it all depends on how much time you have in the system and your age. And we are more than equipped to help figure out where you stand currently, because there's even different rules if you're a police and fire category as well. So this is just a little taste of what that looks like. Now, what if you are tier 3, also known as OBSERV? Things get a little bit simpler. There's not as big of a chart. So you can retire at age 65. It does not matter how much PERS service you have, or age 58, but you have to have had 30 years of service in this situation. Police and fire have different rules, and you can retire if you're a general service member at age 55, but there are vesting requirements to do so. And if you're curious about what that is, we'd be happy to discuss that over an appointment. But these two charts right here, depending if you're tier 1, tier 2, tier 3, are really helpful in figuring out when you can retire with full or reduced benefits.
Great, thank you, Edgar.
Yes.
And then let's talk, we're going to be flipping back between tier 1 and tier 2, and then the officer for tier 3, just to cover all the bases. So let's first start with how the income works for tier 1 and tier 2 pensions. It does take into account a number of factors, including your age, your average salary, creditable time served with the state agencies, as well as your account balance. So there's two main methods. It's full formula, which you can see the category there, and we'll walk through an example, or money match, which takes your life expectancy and your account balance and multiplies it by 2. Simple math, but it's also tricky because you have to go behind the curtain, the black box, to figure that one out. But don't worry, PERS actually does a pretty good job estimating all that for you, which is nice. But let's look at the full formula calculation just for rough numbers. Your final average salary, you take those 3 years, 45,000, 46,000, 48,000, divide by 36 is an average annual salary for your final years at 3861 per month, times, and if you have 30 years of service, now that bottom line shows the formula, which is take 30 years times the 3861 times that magic factor of 0.0167, and this would be your estimated benefit using the full formula process. So $1,934 would be your initial monthly benefit using that method. But I will say that the PERS calculators will give you the higher of the calculation options. So, but this is a nice, easy way to see, okay, well, what's one way that it could be calculated? Okay, and then to go to tier 3 or OPSERP, it looks different. So this is the full thing for tier 1 and tier 2, but you see there's these big red lines through through the left side there. That was tier 1 and tier 2, where you know, you would have money going into the regular variable accounts as part of your pension. Well, for OPSERP or tier 3, it's just this side of the house for your pension. So you've got the employer contributing, as Edgar had mentioned, that goes into an account, and that's what pays out these benefits under OPSERP. So the calculation will be much simpler, and we'll show that next. It's because it doesn't include any of these tier 1 and tier 2 benefits. And then also, as Edgar was mentioning, there's IAP. So this is contributions if you started anytime past 2004, that 6% goes into your IAP account, which you'll also see on your statement. And we'll review all of this IAP as well as the statement here shortly. But let's look at the income side for tier 3 OPSERP. The factors that go into it are your credible service time and then your final average salary. So it's really the highest 3 consecutive years or your final 36 months get calculated into that. And it's a similar factor that we used before, but it's just the one. So you would take those same, your final average salary, divide by 36, same number. So you take 30 years of service, if that's what you had, times this, this factor for your average final salary per month, times 0.015. So that's the number used for OPSERP or tier 3. So then your estimated benefit would be about $1,737. So if you notice, it's about a couple $100 shorter per month than the tier 1 and tier 2 in terms of an actual pension benefit. But hey, we're keeping the state running, so I think that's probably okay. Let's talk about IAP in a little bit more detail. So everyone, again, who has been part of a state-run organization or school since 2004 has been part of this IAP program, individual account program. What happened in July, so July 1st of 2020, that was 3 years ago, just over 3 years ago, what happened was 6% of your salary was going into your IAP account. And now that has changed since this new Senate Bill 1049 happened 3 years back. If you have earned $2,500 for the month or more, then part of that, and here's the numbers here, will go to the EPSA account, which stands for Employee Pension Stability Account. And so you will start to see this on your statement. We're going to show you in a little bit where you'll find that. But it's 2.5% of that month's salary. So in other words, 3.5 goes to your IAP account, and now 2.5 goes to help stabilize your pension. So it's meant to be a stabilizer, so that the state can pay out your pension, which is good. And for tier 3 or OPSERP, because it doesn't need as much to stabilize it, it's only 0.75%. So 5.25 will be going to your IAP account still, and then 0.75% will go to your special stability account. So that is currently happening now. And the other thing with IAP, it used to all be provided from your employer, would pay into that. And now it can be your employer, but a lot of times you are paying into that yourself. So that's, it can work one of two ways. So you may see that, and we can help you if you want us to look at it. We can look on your statement, your pay stub, to see where things are going and who's picking up that bill. The other, one more important thing about IAP is that it is not part of your pension benefit. So this is specific to you. It's like your own 401k, but it's not quite a 401k. It really is a separate account that is, you're able to utilize it in your retirement years. So think of that as more of your money versus a pension. There's a bunch of calculations and figures you have to work through to figure out how that works. But this is your account, at least what's put into it. So let's talk about getting money out of the IAP account. So this is specific only to IAP. There are 3 main ways that you can do that. And I will say, so upon retirement, you do have to make a decision. You have to choose one of these options when you retire. And in fact, you have 120 days to make that decision. The first payment has to start within that 6-month window. So you do want to make sure when you're planning for retirement that you actually put this piece on the table, as trying to figure out what to do with it. Your IAP account can be inherited by a beneficiary, so you can name someone that would receive this if something did happen to you over the course of your retirement. So the 3 main ways that you can take money out of IAP is you can do a lump sum distribution. That means everything's going to come to you. It's going to be fully taxable. Careful there. You want to make sure that's the choice you want, because taxes are taxes. So we can help you navigate choosing these 3 as well, but we'll just go over them now. Lump sum rollover is another option. You do get a check sent to you, but it's made out to the new custodian, so whoever's going to actually hold the money. And this is a non-taxable event. You're basically moving it from the IAP account through the PERS program into your own account somewhere. And so we can help you with that if you'd like to do something like that. And then installment distribution is the 3rd option. You can actually pay out the IAP over a 5-year time frame, 10-year, 15, 20, or your whole lifetime. So they'll kind of prorate it across how long they think you'll live. And then you can receive those payments monthly, quarterly, annually. Do note that you will have investment gains that could be subject to gains or losses there. And then, of course, everything you distribute is also fully taxable to you. So you've never been taxed on this IAP money. Taxes will come due when you take it out. Then the other point there too is that you are locked in on this decision once you set it, but you can, of course, take things out fully or roll it over anything that's left after you've made that decision. But it's wise to get some good counsel and just make sure we can walk through the pros and cons, the benefits, or the potential drawbacks there of the different pieces here as well in terms of distribution, and just help you walk through that and navigate it. Okay, and since we love IAP so much, we're going to do one more discussion on that, and this is about the investments. So there are different target dates that you can choose for your investments, and you're actually automatically put into the one that's based off of your birth year. So if we take, for example, if you were born in 1965, let's say, you're around 57, 58 years old, you would be defaulted into this 2030 target date, which just means you're going to retire around the year 2030. Well, IAP now allows you to change that fund at any time you want. Well, once a year in the month of September, you can change it to any of these fund lineups that you would like that will take effect for the next calendar year. So for this month, you can actually log in now and make a change if you want. And the reason you may want to make a change is if you'd like to be more aggressive with your investments or more conservative with your investments. Because currently they're planning on you retiring in 2030, around there. And this fund will automatically get your investments more conservative as you approach that date. And it'll pretty much be in things that are very liquid, that they're assuming you're going to utilize this account and need it in pretty short order. So sometimes you may have investments at other places where you say, hey, I want this account to be more aggressive because I've got more conservative investments elsewhere or outside of retirement investments that I can utilize. Or you might say, hey, I'm not a big risk taker. I might want to be a little bit more conservative. If that was the case, then you would say, hey, even though you're not retiring in 2025 or 2020, you can still select that date knowing that your investments will be a little bit less risky, if you will. And remember, with great risk can be great reward as well. So you want to be careful in terms of picking things just based on how you feel, but think about your future and what you want to see in that account for when you may need to use that money. So again, we can help you navigate and at least kind of give you pointers based on that if you're looking for individual decisions. But obviously the higher target dates would mean more investments that are in the stock market or those types of investments that have more of the ups and downs, but then the potential for a greater gain. All right, I'll pass it over to Edgar.
Perfect. So we've gone over retirement, we've gone over payouts, we've gone over investments. Well, what does this all mean for you as the consumer, as the individual? And reading your statement is one of the most important things you can learn how to do. So we have an example coming up here. And I just want to take a moment to walk through this with y'all. So it's really important to focus on the green boxes. So top right corner, it tells you what year this statement is for. It is always important to make sure that your PERS ID and your date of birth are accurate. You want to make sure that everything is being captured correctly for you. Now, if you go down to the employment information section, you want to make sure all these things make sense. Every year, make sure everything is clean and in order. But now comes the fun part. So if you're a tier 1 person in this situation, you can invest your tier 1 pot of money into 2 different accounts, the regular account or the variable account. So you can see how much money you have in each by just looking at the account balances. But what's really important is your earnings rate. So if you're looking at how well your investments have done over the last year, those green boxes that state that earning rates tell you how that performance is. So in this case, The regular account is earning 7%, and the variable account did 10%. So it's really important to keep up with those. And then the bottom left-hand side, your years of service. If you're thinking about retirement and figuring out whether or not you're eligible based upon your age or time, that section right there is going to be really helpful for you, and especially when it comes to making a decision. And if you're a police or a fighter unit, you have some information on the bottom right-hand side. In this case, there is nothing there to show, but it is there if you need it. Now, the next part of the statement is all about the IAP. So you can see what target date fund you're invested in. In this situation, it's the 2030 fund. And it also has an earnings rate. So in this example, it gained 8%. So if you are curious about which fund you're in, this is exactly how you find that out. And if you want to make changes, which is something you can do now in the month of September, you now know where you are. If you want to be more aggressive, you pick a target date fund that's later out in time. If you want to be more conservative, you would pick one that's a little bit closer. But this section tells you how much money is in the IAP, what you're invested in, what you've earned. And then the section below that is the EPSA account. So the Employee Pension Stability Account that Jason mentioned earlier. You can see exactly how much money you have in that account, how much it's grown. And it's just really important to keep up to date with this information on an annual basis. Make sure you share this information with your financial advisor to make sure that your financial future is on track as you near retirement. So it's a really good thing to do. Always check your statements.
Great. Let's talk a little bit about transitioning to retirement. I know there are a few that continue working after retirement. They retire and then they have to re-retire later, which is totally fine. And I think PERS has made it a little bit simpler recently to where you can actually go back to your same or your current employer and continue working, and it doesn't affect you too much. There's a bunch of rules around it, so we definitely want you to talk to your HR department or anyone maybe directly at PERS. But the big thing is you can take that pension, so remember that monthly amount, and basically retire, but then keep working for a PERS eligible organization. So that's totally fine to do. The limitation on how much you can work does expire next year. So end of 2024, that Senate Bill 1049 does put some restrictions. It was kind of put in place with COVID, and now that is nearing an end. So again, double check if you're going to be working past the end of next year to see if there's something you should look at there. Okay, then in terms of retirement options, so the different plan options that you have for tier 1 and tier 2, these are all the different ways that you can take that pension. Everything from getting the highest monthly payment, beneficiary gets nothing. So if you're married, be careful there. You want things to go well. So double check with your spouse. Plus they have to sign off on it. All the way to, a beneficiary can get 100% if they outlive you. And you can actually take out the total lump sum. So maybe you want to do something different in terms of, usually people would roll that over into an IRA or something like that, but you can also take out the cash. Again, be careful because the tax man does come when you take out a lump sum like that. Well, when you take anything out. But anyway, you have a bunch of different options here. And you do want to make your selection. You have, once you make it, you're set, but you do have 60 days to make that change, after your first benefit payment comes in. So if you've made some sort of little mistake, you can do that, correct it. But if it's been 3 months, you're not going to be able to go back and make a change to, for example, add a beneficiary to receive it on there. It's not going to happen. What's neat about PERS is you can do some unofficial estimates online. So you can go to the Oregon PERS website and make some guesses of when you're planning to retire, of how much you think your final years of salary will be. You can do all of that. And then if you're within 2 years of retiring, you can actually request an official estimate. So they will prepare that and physically send it out to you, where you can actually look at the numbers and see these different options with dollar amounts attached to it of how much you will be paid out each month, which is pretty neat to see. Then you'll also see, sometimes you'll have an option for what's called purchase. So you can basically pay a little bit of money to get a higher monthly benefit that would obviously last the rest of your life. So those are things you'll want to look for and pay attention to. There's also, you may notice there's a way to get your pension to be a variable amount. Again, that's something you might want to be careful with. So it would be based off of that variable account and the variations in the market. So if you want a flexible salary for the rest of your life, you could try that one out, but definitely talk with someone first before you make those sorts of selections, because this is for the rest of your life. You don't want to make something in error that you'll regret later. Now for OPSRP or Tier 3, the options are much simpler. You really just have about 5 options here. So you can pay everything out on a monthly basis, beneficiary gets nothing, or there's a couple survivor options, 100% or 50% of what you were getting, and you can put a contingency option in there. There is a small chance if your OPSRP pension is really small, they may just pay it out as a lump sum, but that's pretty rare unless you weren't working very much with the state. Okay, so we are near the end of our presentation here. So we do have some next steps of what you might want to do. First of all, definitely text your questions in to our number 458-777-4458, and we'll stick around to answer those questions. If you would like us to review your financial situation, you have PERS or you know someone who does, you want to get them to us, have them text PERS, P-E-R-S, to that same number, 458-777-4458. They can text that anytime, and then we will send a link to set up a review of what you have going on, totally complimentary. Be glad to look at your situation and see how we can best help you navigate the Oregon PERS waters.
Yes.
And then I do have, as you're putting in your questions, we do have a couple of disclosures here. So we do work with LPL Financial, that's our broker dealer. There's information on here, but they are the largest independent broker dealer in the nation. What's nice is they don't have any proprietary products, so we don't have to push anything to you that doesn't fit you. And of course, lots of insurance and protections are covered for you. And then this is my last slide with some disclosures that you may want to read as you're submitting some questions. So we'll wait just a couple moments for some questions.
Okay.
And I'll put it back on the texting slide here. All right. Are there any questions out there? Well, I'd say we've answered everything, right, Edgar?
We did a very good job. Well done.
Yes, we've covered all the basics. But again, we are available at any time if any of you need help. Also, feel free to forward this if you're receiving it as an email or online. You can forward it to a friend or anyone a coworker that might need this information. Just kind of a basic overview to help you navigate moving forward. Well, thank you all for your time and have a great rest of your day.
Take care, everyone.
Bye.
Bye-bye.